Vast Resources has mines and projects in Romania, Tajikistan, and Zimbabwe. It has signed 2 association agreements to process and market products from the former Hannes gold mine located in the Alba region of Romania. So, how do shareholders benefit? I'm delighted to be joined by the Chief Executive, Andrew Prelea. So, Andrew, when will these agreements be executed, and has all the appropriate criteria already been fulfilled prior to execution?
Hi, first of all, hi, it's been a long time. I've been awfully silent because we've been awfully busy. Both of these agreements have already been executed. One of them was executed last week, the smaller one for the concentrate sale, which we didn't think was a large enough impact to warrant an RNS, considering that we were in the final stages of executing the larger project, which is the Hannes rock dump, which was executed yesterday morning, I think. No, sorry, the night before. Yesterday I was up at Baita. So yeah, it was the evening before. So we released it as soon as all the approvals of the regulators, etc., and the lawyers checked everything. So that yeah, it was executed the day before yesterday. So it's fairly recent, but we've been working on it for quite a while. The Hannes mine, which sits adjacent to Gabriel Resources' famous Rosia Montana, it's in the same golden triangle as Rosia Montana and Certej and the Eurosun and all of the high value gold mines in Romania. And from the Roman Empire all the way through to the 1990s, it was the largest producing gold mine in the country, with the geological in situ grades ranging in a pyrite host and polymetallic of between 8 and 9 grams a tonne. And during that period, the long period of processing, the cutoff grade was 2 grams a tonne. So sitting in the rock dumps, which they had over 1.5 billion tonnes, 1.5 billion tonnes, about 750,000 cubic meters, is rock that was never processed. So it's just sitting on the ground, sitting in what they call a waste rock dump, but it's actually an ore dump. And there's another one of a similar size sitting right next to it, which is grading just over 1 gram a tonne. So we've now signed for processing this 1.5 million tonnes. We will start it at Baita, utilising an unused line. Production was actually commencing the first test run of 200 tonnes. The trucks are on the road right now and on their way to the plant to start processing. So it is very near term.
So I'm just wondering, what form does the processing take, and what are Vast's obligations within these agreements, and how much is it going to cost Vast?
Well, we're doing the 500-tonne concentrate, which was a very high-grade concentrate, which was a former tailings dam within the region, which we've also mentioned, that had contained high-grade gold, around 1.5 to 2 grams a tonne. And the owner of the site actually just did a very small test run of about 500 to 1,000 tonnes of concentrating tables, didn't actually implement Nelson concentrator, so very, 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 let's say, rough concentration of this material, which left about 500 tonnes of saleable material, and that is actually being bagged at the moment and ready for sale, and it's in the tender process with 3 large off-takers that are looking to basically bidding on buying this material. So that's quite a near term. It's just a matter of manually bagging it because it's been sitting on ground for about a year, so we're just filtering it, bagging it into 1-tonne bags, and hopefully it'll be ready for export in the next week or so.
Okay, because I was going to ask the same question about the marketing portion of the agreements. What form does that take, and who are the likely buyers? Because marketing must surely be more than just bagging up wet earth into 1-tonne bags.
It's a little bit more than that. It's because we have we have an established history with several off-takers, and most people know that we've worked with Trafigura, Mercuria, and now Nikash. They're the 3 front runners, obviously. They've already got sampling. Some of them have already done test work on it, and we're waiting to see who is the best potential buyer for this material. So that's all going to take. They want to finalise the bagging so they can do proper sampling and proper sealing of the bags. And then from there they can, because it's a new, let's say it's a new product for them, they have to go through the protocols, because there has been some unfortunate errors in the past with, fraud, let's put it, in the past from other countries, where they bag things up and they replace them. So nowadays, for your first shipment for any new product, it has to go through a rigorous testing program. and third-party validation before it's exported. It doesn't matter if you're an existing client or not. If it's a new resource or a new concentrate source, it needs to be tested rigorously. So that's really all we're going to be waiting for once the bagging is continued. So it's our established relationship with the off-takers that has brought the owners to us, plus being the only miners that are active in Romania and the only person with people with flotation plant to be able to process their other material, and having the technical team on the ground. That's why the choice was to work with Vast for this these particular contracts. And it also opens it up that, within that Harnish mine, it was 132 hectares. There are over 30 rock dumps there and tailings dams. So there's a lot of long-term opportunity for the company.
Okay, so I'm just thinking, taking all of this into consideration, what does Vast stand to gain financially? Because it just sounds as though it's a bloke with a shovel cleaning up a site, putting rocks into a one-ton
No,
bucket.
it's part of a greening project of the closing of the mines. The owner of the site has acquired it. Part of the condition was that he was to clean up those former rock dumps because there were, it was a bit of an environmental disaster. Unfortunately, there's not a lot of access to technology or people or know-how in country, which is why they came to us. Despite some of the naysayers out there, we actually are a reputable company in Romania in the mining space, and we are the first choice for many of these opportunities, including some of the former government mines we've talked about in the past. And this one falls into the private ownership of a family who had let's say, with a metallurgic background. He's an individual who spent 4 years testing all of this material to see what he can extract out of it, but couldn't actually make it economically viable on his own. And that's why he came to us. So it's not a one guy with a tractor. He's bought shaking tables, he's bought excavators, he's bought flotation, mini flotations. He's done a lot of work. In the meantime, over the course of the last 8 to 10 weeks, we've also sampled, we've surveyed, we've processed, we've done mini lab flotation, we've done separation, we've sent the material up to the National Institute for Mineralogy to make sure that it is what it says it is. So we've done quite a bit of due diligence, not really expensed a lot of money, to be perfectly frank. And the intention is to send this first 500 tonnes, and the money that is made for the joint venture or association partners, they don't call it a joint venture in Romania, it's an association, that will fund the first phase of the extraction or the processing of the old rock dumps. So really there's no net cost to Vast other than the electricity and the labour costs that we're already paying in the flotation. So it's no additional cost, and we'll just apportion those costs and back charge it after the proceeds of the final sales.
Okay, so you say economically viable. I'm wondering for whom, and what did the sampling of the rock show? Is it gold? Is it tin? Or is it tantalum?
Predominantly Harnish was a polymetallic. So some areas contained lead, some zinc, but all of them had one common denominator, and that was high-grade gold and pyrite. It was a pyrite ore with high grades of gold ranging between 8 and 9 grams per tonne. As I said, the cutoff was 2 grams, and that's the material we're processing now. So effectively, we're sitting on a pre-mined 1.5 million tonne, a 2 gram a tonne resource sitting on ground with no mining costs and purely just only processing costs. Unfortunately, in Romania, the use of cyanide has been banned. So the only way to extract this is to utilise a flotation. The only people with a flotation plant in Romania is Vast.
Okay.
So it's quite fortuitous.
Fortuitous indeed. So in the RNS, it says that the agreements will result in cash flow for the company in the near term. Can you qualify what near term means?
Well, the 500 tonnes is expected to be shipped in the coming weeks, so that's quite near term. We're going to start processing 200 odd tonnes a day from the spare mill at Baița. That's going to commence in the next day or two. The first 20 tonnes of truck was already loaded today on its way, now that we've signed and announced. We want to probably process the first, let's say, 1,000 odd tonnes, see what the concentrate says. Well, the first 200, if it matches the lab results, which were quite good. I mean, we want the 1.5 gram a tonne feed grade that we processed in the lab conditions. Did it with a 1 cell flotation, produced just over 7 grams a tonne of gold in concentrate, which one would say is a good grade. We want to try and get that somewhere higher, in the double digits, which makes it very viable from a transporting perspective. We don't know what the mass pull is. That means how many percentage of tons of ore relates to tons of concentrate, but we anticipate, in the normal realms of flotation, it's going to be between 3.5% and 5%. So if you want to reverse engineer that, you then say that, for every ton of every 100 tons of material that you process, you get 3.5 tons of concentrate at somewhere between a 10 and 15 gram per ton gold concentrate. That's the basic math of it. And you've got 1.5 million tons of this material with a further 1.5 million tons adjacent.
Okay.
So eventually we'll take those profits and build a processing plant there, but that's a 1 to 2 year process. In the meantime, we'll continue using the beta equipment that's on site.
Okay, because I'm sorry to keep interrupting, because
No, sure.
Cash flow is obviously very important, because there's a 26th of September deadline looming for VAST to pay an outstanding debt of almost £6 million that's due to A&T investments. So you
it's
have
$5.8 million, not pounds. Not that it makes a difference when you haven't paid it. But the misconception in the market and what's been, let's say, banded around within the bulletin boards, that if we don't pay on the 26th of September, it's lights out for VAST. Well, that's absolute nonsense. The 26th of September is the date that the A&T Investments has the ability to commence the enforcement proceeding against a third-party asset that was given as a collateral security. So it's got no direct impact on any of the business, on VAST as a whole. It's not a nice place to be, because somebody did provide that third-party guarantee for VAST. It is our intention to pay that in full. A&T is aware that we intend to pay it in full, but they have to protect themselves, which is what they said in the previous RNSs, that they have to commence the proceedings to be able to enforce the asset. But it's not an enforcement on VAST, it's an enforcement on the third-party asset. We will not let that happen. We are still continuing with the Swiss investor, and what is not publicly appreciated, I won't say aware, because this is public information, is that the directors of VAST and VAST and the company have first and foremost the right, the obligation to protect the company. Not the shareholders, not themselves, not their salaries, as people like to band around, but the most important thing, and the director's duty, especially now that we're only 2 executives and the rest of the directors are non-executives, is it is the preservation of the business. And that is what we're in, preservation mode of the business, to ensure the continuity for the benefit of shareholders long term. So we have to look at what are the options for the Swiss investor, what are the options for obtaining funding and finance and equity from other sources, what is in the best interest of the company, what is the least dilutionary for the shareholders, and we are basically running it to the wire to make sure that we arrange the best possible solution for our shareholders. It is the intention of the board to pay in full A&T and Mercuria and our other creditors, and we are still on the path to do so. So we don't feel that there's any impediment to the company on the 26th of September. It has no bearing to the continuity of the company.
Is the company in preservation mode?
It's in preservation mode from the point of view that it has got a debt and it has got an obligation, a moral obligation to the provider of the third-party security to make good on that. So in that perspective, yes, it is. And also, when you look at it, we've had share price destruction based on opinion rather than fact. We're still sitting on, NAV of, third-party independent valuations that have been published of 2 assets in Banaila and Baitsa in excess of $200 million with a market cap of, 1.8 million pounds, or whatever we're sitting at today. The true value of the company is not reflected in the share price because of sentiment, not because of what we have in our portfolio. Not to mention what we're doing in Tajikistan, not to mention that we still are a strong belief that we will recover the diamonds that are sitting in Zimbabwe, because we have won the court case and we have discussions, and there's a lot of speculation out there. And what you read on the bulletin board is absolute nonsense. They are still there. We are confident they are there, and we are confident we will finalise. But it has to be done in a certain protocol and a certain timeline.
Okay. Understood. And I know that you can't say anything about the diamonds. You've
No,
already said
I
as much.
can't.
You probably
As
said as
much as
much.
I possibly can. Yeah, we still remain. And what people don't realise is that we have an obligation. We are AIM directors. We have an obligation to our shareholders that if anything changes from what or deviates from what we've said, whether it was an RNS 1 week ago or 1 year ago, if anything changes, such as the Swiss investors, such as the diamonds, if we did not have confidence and documentation, which we have to provide to our NOMAD and the regulators on a regular basis, if any of that was to deviate, we would have to announce it. If the deal was dead with the Swiss, we would have to say the deal is dead. If the diamonds were not coming, if we believe that they were not coming, we would have to say they're not coming. But every time we highlight the point that we're getting closer, it creates problems in country, and that's something we want to avoid.
Understood. Now, so going back to this week's RNS about the agreements to process and market products from the former gold mine, is this where VAST is heading, sort of ecological cleanups on sites around the world?
Well, no, not necessarily. For us, it was an opportunity to look at some low-hanging fruit and near-term cash flow generation for the company. You know, we had a bigger picture planned from VAST in Romania from day one. Baita was an underground example. Manaila was an open pit example. It's a very difficult environment to work in, but we've managed to survive, and we're going to continue. And we will reopen Manaila, and we will continue with Baita, and we will improve it as we have done so just recently. So, you know, and that will lead on to other things. And this is a prime example of some of the things that are available to the company for its growth. And this is, you know, 2 of potentially 30 or 40 projects like that. We can't claim that we have the bandwidth to do them all, but at least we have the opportunity to cherry pick what is probably the best of the opportunities in country. And as the same thing as we're doing in Tajikistan right now. I mean, what we've done in Tajikistan, you know, it's a different environment. It's a new jurisdiction. What we did in Takob gave us the opportunity for Aprelevka. Aprelevka is, you know, we've managed to almost triple the throughput in under 6 months. We've managed to increase the production by over 30% in under 4 months. We've increased the profitability of the company by about 20-30% just on cost savings. So in other words, we've generated a net revenue to Aprelevka of, you know, almost $4 million in 4 months of surplus income above and beyond what they were doing in the previous quarter, and, you know, way above that what they were doing previously to that. You know, we've got 4 licenses that we're working on at the moment. There are another 7 available. So the 4.9% that VAST holds, or the 10% of the 49% in a royalty stream, you know, that amounts to potentially a very, very large amount of money, and the opportunity to do more. And when the company is in a better cash position, with the opportunity to buy into these other projects as well.
Gosh, Andrew, after the silence, you've certainly made up for it. So silence equals head down. So
Exactly.
yeah.
Exactly.
So final words to shareholders. You know, after this week's RNS, is it because it sounds as though the company's becoming polymathic in its approach?
Yeah, I mean, look, it's exactly what we need to do. Is we need to, as a company, as I said, we are looking as directors at the best interests of the company and the shareholders. They work together hand in hand. Our shareholders have suffered quite, you know, share price destruction over the last couple of years. There's a lot of complaints about dilution, but it's not something that I wanted. I mean, at one stage, I was the largest shareholder in the company. I've got, you know, I've sunk £5.5 million of my own money into VAST, never sold a share since 2013. Those shares are still worth, you know, 1 or 2 cents in the dollar. So I am suffering well and truly alongside, you know, the directors, and it's in the annual reports. It's not a lifestyle company. It's not like we're taking exorbitant wages. We're not at the moment. We haven't done so for a very, very long time. We are working to turning this company around and turning it into the mid-tier company I've always said it will be. And we do expect that to happen sooner rather than later. It's basically just a matter of, you know, when, not if, as far as we're concerned.
And what do you want VAST to become?
To become what we set out for it to be, which is basically a mid-tier mining company. And I believe with the assets that we have, and the pipeline that we have and the opportunities that we have, that is coming. It's just a matter of time as far as we're concerned.
Many thanks. Andrew Prelea, Chief Executive of Vast Resources. Thank you very much.
Thank you very much.